Hello financial fans, talk a little bit about stocks I bought in October and November of 2020. This is December of 2020, early in December. And I've done pretty well with these stocks. I think it's a total of 11 stocks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 stocks that I will mention, beginning with C, that's the symbol, the letter C for Citigroup. And I purchased it on October 12th of 2020, and I paid $45 for it. And now we take a look at it today. We see a Citigroup, $58.62. As of today's closing price, I'm up 30% on this one. It has a closing price $58.62, up $2.04 on the day, 3.61%. That's an incredible jump in one day. And we'll look at the first column, 3/4 of the way down, the 52-week range, $32. Some people bought in at $32, so they got in even at a lower price than I did, and it has been as high as $83, so it still has plenty of headroom. Although I'm thinking strongly about selling that one on Monday. And the next stock we look at, XRX is the symbol, and that is Xerox. It's up 16% since I bought it, and I bought it on the 12th of October, same day as I bought the Citigroup. And the XRX I bought at $20.05, and the price now is $23.35, so it's up from where I bought it. And we look down the 3/4 of the way down the first column, 52-week range. It was as low as $14. People could have gotten in at $14, and the high $38.69, so still lots of headroom for that one, and it's paying a real nice dividend, 4.4%, which means I'll probably hang on to that for a while longer. And we move on now to the next stock, and that stock is CVS Health Corporation. We know about their drugstores, and there's more to them than that, but CVS is the symbol. It's up 25% since I bought it, and I bought it on what date? I bought it on 10/12, October 12th. So another one I bought on 10/12, and I paid $59.81 a share when I bought it, and looky there, it's up in the 70s now, $74.50, and less than a couple of months, and up almost 3% there today alone. This is, by the way, is Friday that when I'm putting this together, and I guess it's Friday the 3rd or 4th of December, and it is the 4th of December. So in less than 2 months, this one has gone up, what did I say, 25%. That's quite good. And we look down at the numbers here. The dividend yield under 3%, 2.76%, but still a decent dividend yield. That would be a good normal amount to be earning on that amount of money if you had it in a bank. Average volume 9 million shares, and they're expecting it to go up quite a bit this year, up to 81.71. That's what some of the experts are expecting. So they've done well with CVS, and we move on to the next stock that I have bought, Frontline Limited. FRO is the symbol. FRO is down for me. It's gone down 2% since I purchased it. And when did I buy it? FRO I bought on 10/19. 10/19 I bought it at $6.77.5 a share, and it's now $6.63, 6 2/3 per share approximately. And the PE ratio, middle column, middle of the middle column, PE ratio 2.47. So that thing might still have some life in it. We'll have to see. It trades an average number of shares 2.18, 2.2 million shares a day traded. And we move on to the next issue that I bought. DHT Holdings. DHT Holdings is up 7% since I purchased it. And I purchased it on 10/19, October 19th. I bought it for $5.1799, so $5.18 a share is what I paid for. It's now $5.53 per share. So it's moved up nicely since I bought it, and it trades over 2.5 million shares a day. And the PE ratio is way down there, so it has some life in it. And look at that dividend. Hold on to it for 10 years or so, I'll be a rich man. At 15%. That's a tremendous amount for a dividend. Let's move on to the next stock. BTI. This is a British American tobacco, and it pays a huge dividend of 7.41%, and BTI is up 12% since I bought it, and I bought it on 10/27/20. I paid $32.96, about $33 a share for it. Now it's $36 a share, $36.92, almost $37 a share. And everything about it from a financial standpoint looks very good. More than 2 million shares traded every day. And move on to the next stock, which is MO is the symbol. Altria is the name of the company, of the issue here. This is it's now at $41.37. Since I bought it, it's gone up 11%, and I bought it 10/27/20, October 27th. I bought that right before Halloween for $37.20. So it's moved up a lot since then. The dividend 8.5%. A real big dividend on that, and they're expecting it to grow a lot this year. They're expecting it to reach $47.50 next year. So we move on to our next stock, which is Intel. You remember me talking about Intel, INTC, and here it is. I bought it on November 5th, so just about a month ago I bought it at $45.62 a share. I bought it. Now it's $51.99, $52 a share, and the dividend adequate, certainly 2.5%, and it trades 33 million shares, not $33 million, but 33 million shares. Actually, a lot more than $33 million, but and it's still considered to be undervalued. Intel. That's one I'll probably be hanging on to for a while. By the way, that as far as what we've looked at so far, the very first stock I mentioned, Citigroup, I probably will be selling that Monday, since it's gone up 30% already. Even though it might still go up a lot farther, I might lock in the gain so far. So now we move on to something known as, there we are, PBF. It's up on this particular Friday. It's now $8.31 a share. I bought it. It's up 8% since I bought it, and the date that I bought PBF was 11/25. Not too long ago, a couple of weeks ago, I bought it at $7.72.5 a share. So it's up nicely from where I bought it, and it's expected to go down in 1-year target, and yet they call it undervalued. So I'm not sure what they're trying to say there, but 6 million shares trade every day. The 52-week range, very odd, from $4 up to $33. That might be one I should sell while I've got a profit in it. I'm not sure what is going to happen to that, but that is a nice profit so far. And the next one that we'll look at is ARKG. ARKG is ARK Genomic Revolution ETF, Exchange Traded Fund. I had ARKK and ARKW before. They both went just about double what I paid for them, and I got out before they went double. They just keep going up. Here it is. On Friday it went up 4% after having gone up and up and up. And when I bought it, ARKG, I bought. It's up 16% since I bought it, and I bought it on 11/23 of 20, and I paid $77.31 for it. Now 89. I have no idea what the people at ARK are doing, but they're sure doing a good job of it so far. And if they're just guessing, they're doing some good guessing. The stock up year to date, total return 156.5%. That's just amazing. So whatever they're doing, I don't understand it, but it's working, so I will not question it. Now go on now to this next stock, which will be the last one we look at right here, I think. Yeah, RTX. RTX is Raytheon. That's the stock I thought was going to jump up because of problems in the Middle East, but so far no shooting war has started there. And yet Raytheon's going up very nicely. It's $73.91 a share as of today, and when I bought it I paid $72.23, up 2% since I bought it. My point in all this is buy low, sell high. That's the message all the time, but learn to read the stock pages. I use Yahoo, as you can see here. These are Yahoo pages, but I also study the stocks with Google. Google has a good finance page with lots of information where you can find out about stocks. And I also use the pages at my broker, TD Ameritrade. And especially when you're looking at stocks, look at certainly the price that it is at today, and what the 52-week range was, and whether there's room for it to go up. Are there people who paid more for it than the price that it is today? So check the 52-week range, see if it is overvalued, undervalued, whatever, and look at the dividend. And in this case for Raytheon, 2.5% dividend, which is good for a stock that's still moving up. It's considered a growth stock. This one doesn't have a PE ratio, which probably means that it did not have any earnings to report last time, so there's no earnings to compare to the price. But study the stocks for a year. Don't invest until you do. Remember, stocks are not insured. Whatever you have floating out there in the stock market at your brokers, it's not insured. Your house probably is insured, and it's probably going up in value. It has a certain amount of value that could be perceived from day to day, and it does have some insurance if something happens to it. Your car has some insurance if something happens to it, and the value of your car probably goes down a little bit every day. Stock market, you're out there alone in the wild world of finance, and you can lose your money, but you can also make a lot of money. I've been in the market for certainly more than 40 years, probably closer to 50 years, and I don't have the actual numbers here to check, but I'm pretty sure I've made more than 10% a year on average. There have been years when I've lost, and there have been years when I've made tremendous gains. But there we looked at some of the stocks, all the stocks that I bought in October, November of 2020. I thank you very much for watching.